Good evening, everyone. This is Henry, and as we get into the premium content that will apply for Thursday, a little bit of an interesting spot in the indexes, and we can start wherever you please. It depends on which way you look at this, because if you come in and look at certain things, depending on the product you're looking at, you may see slightly different values. So you look at something like SPY, and we haven't quite made this 1272 extension off of our previous major swings. You look at SPX, and it's a little bit closer to it. So which one do you come back and ultimately use at the end of the day? Well, what I have found to be helpful is that the voodoo lines are a nice addition to this. So, like, take example for SPX when you look at it and say, well, you're right up there near that extension, which is true, but you held the ADMA beautifully. And from that point of view, I just think that these overhead skylines, or snow lines rather, make for excellent targets. So if we can get up there and get into that area, that will be a spot that I'm definitely more willing to take these positions off and go into the weekend with a little bit less holdings. I also have to make sure that this is pointed out that the skew has reached the highest level that you have seen all year. Now, it's worth noting that a high skew does not necessarily guarantee a decline, but it very well could happen. So this is the type of stuff that when you see these signals, especially it's interesting to me that the skew is skyrocketing so much as it is without a very significant pullback in the S&P. So what it's telling us is that the out of the money SPX options are becoming more pricey. It's going to cost you more to come in and try and hedge your position. So it just points out that there is some heightened awareness in the market and a little bit of, anxiety, whatever you want to call it. And I think that it would be very smart to go into the weekend with a little bit of protection or a little bit of cash. Now, in a perfect world, what will happen is we will come into Thursday and have a little bit of a bid because these names like Amazon, you looked at this daily squeeze is still firing. Now, it is 1, 2, 3, 6 bars into the move. Generally speaking, we quote a daily squeeze for 6 to 8 bars of strength. So if those 6 to 8 bars of strength can continue to come through, well, then we've got some more cash to make in this trade, and that's what I'm trying for. Now, we spent a lot of time in the chat room this morning talking about how if you want to try and master the clean, kind of technical way of doing this, well, the first put credit spread we sold was exactly that. Remember, we got into it on Tuesday, we held it all the way through Tuesday, and then we waited for the 1272 extension, which was hit this morning. That is the clean textbook way. If you're wanting to learn how to do this, that is what I would have you focus on. After that, after taking profits on that immediate move, well, the trend is still good, and then you start looking for your next overhead targets. So the 1618 extension, provided these lows continue to hold, is going to be 1869, and then same thing here, where you have the snow line just overhead at 1873. Now, I don't know that we're going to get all of that into Thursday and Friday, but if we did, that would be a wonderful opportunity to take profits. And I would not be pushing it after that. The signals that I am focused on for this trade, a lot of times it's easier to look at your fib work if you come in and hide those, but the studies that I'm looking at just show a squeeze all the way down into the 30-minute. So if we apply these back, sometimes Thinkorswim is weird how it doesn't put those back on your chart, but these are the signals that I'm focused on, and then I will also flip back into TradeStation and have these sitting on 60-minute charts. So you can see the 30, the 39, and then if we come back to the hourly here, not quite. I thought it had gone into an hourly squeeze, but we do have the 30, the 39, etc., and those are the squeezes that I'll be looking to fire long. Of course, if they don't, I've got my risk defined by the width of the spread. I would prefer to not let that go completely against me, but I am looking at it from the idea that I've got to hold on loosely, and if we get any volatility tomorrow, I'm going to do my best to try and weather that storm. Okay, so that's going to be one important chart to focus on, and Amazon is in a little bit more of taking profits, trailing it up, or playing it more if you want to be aggressive. Other names to look at that will be important for the performance of the index are going to be names like Apple. This was an interesting chart because as I sent that alert out into the afternoon, I had pointed out that this pattern to me did not look especially attractive. You're on the sell side of the 8 and 34 on the 15-minute chart, and it really didn't look like a very good pattern. Now, at the same time, I find that I save a lot of money by not coming in and trying to play these shorter time frames to the short side, but instead coming back and anchoring myself to the daily. And what I mean by that is I like buying the 8 and the 21. The 8 is the more aggressive, momentum-based moving average. The 21 is more of your reversion to the mean and the area that it really needs to hold if the immediate trend is still any good. But we come down today, you test that 8 EMA, and it's holding so far, so good. So I can't say that I'm terribly excited about it. I actually think that Apple might have a chance of selling off prior to its earnings, but in the same way, let me see if I can get Thursday and maybe Friday for strength. Thursday is really the day that I'm looking to more so than Friday. But if I can see a little bit of strength and continuation there, then I would definitely be flat that one by Friday, and then look for the pullback into earnings. So that'll be an important chart to focus on. You also have Microsoft earnings that are due up tomorrow after the close. So with something like this, I think I'm going to have to play it to the short side. Not saying I'm going to come out and buy puts, but just pointing out that it does have a pretty interesting respective timing. So especially if we were to make a new high on Thursday, because if you make that new high on Thursday, then that's going to line up very cleanly with the idea that this swing low against this swing high is the same movement in time from this swing low into what would be Thursday's session. So we'll see if we can get that to come through. I'm not talking about coming in and being aggressively short because you maybe sell a little bit of a call spread or an unbalanced fly. That's at least what I'll be considering, and we'll see how that plays out for Microsoft into tomorrow. Some of these other key components, I saw that Danielle had picked up a put credit spread on Google into the close, and I tacked on one of these just to kind of see how it opens up tomorrow morning. I'll have to look at it and see exactly what she was setting it up off of. As of now, it did hold the snow line, so that's a step in the right direction. I just have one of those, but I will be focusing on it tomorrow. You also have Nvidia that is starting to ease up onto their earnings. Now, I've avoided it as of now because I'd like to see a squeeze, but if you can start to find some of these, the one that we were looking at today was the 130, and I had pointed out that this was a little tough for me because of this retracement. Anytime you have a major swing high against a major swing low, I tend to at least give that a little bit of a pause. At the same time, I think if you can hold this general area, let's call it 250 down to about 245, I think you would only want to play Nvidia to the long side. So that is a name that I'm going to keep an eye on. I'm not necessarily going to rush it or take a big position in it because of that fire line, but I do think it's worth considering and a name that I'll be keeping a close eye on. You also had a nice rebound in UNH, flipping over into some of these Dow components. I know Danielle had traded this off earnings. It was great to see such a nice rebound. You also have IBM that I discussed briefly in the free video. Now, I think Danielle traded this one a little bit differently, and I'm going to tell you, just like anything that is suggested in the chat room or as you follow along with this and try to learn and adapt strategies, etc. Everybody is going to do things a little bit of different ways. I think sometimes recommending trades that have unlimited risk can be a little bit tricky, but I don't mind doing them, and I thought IBM had some potential to the upside. So as that one sits, that's the way I've traded earnings. It's just nice to see that IBM is doing well. They had a beat on the top and bottom lines, and you're seeing that shift from what has been the prevailing trend over the course of, I don't know exactly how far back it was, but IBM hadn't really been much to talk about. It feels like it's got, I hate to say excitement to it, but I thought that was a decent spread around it. And I will look for IBM to trade up into 148 and maybe 150 tomorrow. So that's what I've got going there. You can see this idea in IBM, you say, and here again, I'll give you the idea that to some degree, earnings trades can be a little bit of a coin toss, but if you come back and look at the big picture here, you've got a little bit of a 618 retracement that I think, even though it was broken, you have to give it somewhat of a benefit of a doubt to the upside. And the other thing that coincides with this is the fire line. I think this is important because then I'm going to step over and make a comparison with it and win. So just remember that the idea is that these fire lines come into a place where a move has reached the final end of its move. Now, it does not mean that you're going to be lucky enough to catch it to the tick, but it means that this is generally a zone where you might look for this bullish momentum to end. Okay, you flush down below it, recover and hold. That I think is helpful in just how I like to look at those voodoo lines. And then if you look at win, I think this is going to be a similar situation. So I'm not telling you that I'm going to come in here and be just straight up long on win for earnings, but if you can follow that pattern in that way of thinking where you push down below the fire line, recover it, and then earnings at least kind of keep the stock bid, That's exactly what I'm going to be looking for in Win. To take things down from the bottom and start back up to the top, XLE has been a little bit tricky here. I could have been a little bit more patient at the open today and exited as the underlying went bid, and it's always good to try and be patient. At the same time, being below the 50-day, being below the 8 and 21, having the shift of the parabolic SAR, and breaking a swing low to swing high and breaking that 618 retracement, I just don't have a whole lot of reason to sit here and continue to force that one. So back up in here, it still fits the plan as it breaks down into these areas. It's just a place to manage the position and say, you know, this is not trading as well as I had hoped, and I do not want to be holding it back down in here should the squeeze fire short. So I did exit XLE. If you waited into the end of the day to do it, you could have got a slightly better price. I won't buy that again until you can get back up above that 50-day, and I've got to think that will take some time, but I will be keeping an eye on it. For Twitter, this has been a little bit back and forth here, kind of some little bit sharper moves down in the way that I've been trading it, because it was mentioned last week with the idea of maybe pinning around 45, but rather than taking the outright risk of just that trade, you tack on the the straddle for the next series out to try and capture some of the earnings IV. So at the end of the day, this hasn't done a lot for me because you moved so far away from the short 45 strike, but it is better to have on the double diagonal rather than just the short straddle in the front month, and that's a way of kind of taking an idea and adapting it to something that may be a little bit more forgiving. And then as far as the recommendation I made, it's only down a dime. I'm going to try to make about $1 on this one. Well, you say, okay, like, is it $1 or do you want to try to make more? Well, it depends on how the underlying trades. I think I could take a buck out of it relatively easily, but of course if this decides that it wants to fire short and really get hammered down into this area, well then I might try to let it give me another $1 or $2. So at this point I really have no opinion on the direction of the squeeze. It feels like it wants to break to the short side, but the long straddle will be more forgiving along the idea of working with earnings, and that is what I've been doing in that name. For TJX, up 32 cents to end the day, so relatively quiet, but really an excellent performer. And anytime you look at this and you say, all right, can I come out and buy this on Thursday? Just remember that if this gaps up and you're buying it up at a new high, how would you feel building the position, or how would you feel if it had to pull back into here? This is the area where we're supposed to be building the position. I've been piggybacking on this one off of some of Danielle's suggestions, but do you see the difference in this one where your moving averages hold very well, the parabolic SAR trades in your favor? And overall, I like that one. You've got the shift in the momentum of the squeeze, good volume the past 2 days, and TJX is something I think you can trade to the long side. I've got Roku up next, and a lot of these do fit the setups that I've been sharing with you. Tuesday was an excellent day for Roku. Today, Wednesday, it pulls back a little bit. If it can get back into 48.30, I may look at buying it again. Right now, I'm pretty small in that one and would like to find a nice intraday squeeze to add back into it. It looks like the 39 may fit the bill. So let's give this a little bit of time to mature. And I think Roku still has potential into earnings. It's just going to be a matter of trying to time another entry into that name. Looking at MDT, this ended up closing down on the day. But it doesn't really bother me at all. Remember, with MDT, the only reason why I'm not really leveraging up in this one is because I have to be able to do that if it pulls back to 86.50 or so. I think that it's still good for a print up into a new lifetime high around 89.72, and if you're looking for a longer term trade, I think this is an excellent looking monthly squeeze. Now, the monthly squeeze in this name is not as easy as looking at it and saying, hey, all of them perform awesome, because some in here, depending on exactly when you traded it, may have been easier than others. The point I want to make to you is look at this one. This is why we do this, is for the opportunity of getting involved in spots like this where it really does run. So, maybe you get into a spot like this, maybe it doesn't end up performing quite so perfect, but maybe you're at a spot where you're about to catch a really good trend in MDT. So, take that as you will. I'm in a little bit shorter dated 30-day out options, but if it came back into something like 86.32, that's where I get the chance to add on more longer dated trades, and I do still like that one. In the case of Lockheed, I use the idea from the CML Viz tool and work to combine that with the Basically, the 39-minute chart, this is the one that I really wanted to set it up off of because the pattern to me looked relatively clean in relationship to symmetry, and you had a nice squeeze with the ready, aim, fire signal. So I felt like the idea of buying the Delta 40 option there would be helpful. It moved a little bit for us. I believe it closed with a delta of about 45, so it's stepping along in the right direction. And that's just a nice confluence of using that work to say, all right, if you think that you've got something that has potential to run into earnings, try to back it with the idea of an intraday squeeze, and those will tend to be some of your best performers. In ISRG, I have to make the decision of what to do with my remaining contract here. So this is one that it's kind of been a little bit of an emotional to some degree. Now remember, we've been talking about this one for weeks, and this was the move, and I shouldn't be concerned about this at all because that was the move that helped pay for the contract that I have left on. But at the same time, I bought that at 17 and it's trading at 46. So when I had this day down here, it's kind of a pretty serious gut check. Not to mention, if it's sitting there trading 46 now, do I really want to hold that whole contract through earnings? I think the smart decision, because I'm trying to push it, but what I'm going to do is hold that long call and then probably sell something like a 570 against it, give or take. But that's here again, don't get too frustrated when situations don't work out because you will have that, and I've got some to look at with you today. But try to focus on keeping your mind right and saying, all right, where's my next opportunity like this? And if you can kind of keep that all level and focused, then there will always be more opportunities in the market. The one that comes up, because ISRG has been awesome for me. On the other side of that coin, AAOI was about as bad as it gets for me. So to evenly represent both sides of the coin, I've been trading this one too, and it got hammered today. So I guess that is what I saw of it was that it was tariff related. It took a while to come out, which I thought was interesting. When it was getting hit, there was nothing on any of the news wires that I follow, but at the end of the day, I did start seeing some information trickle in on it. I can't say that I'm really much of a fan of it here. The squeeze, everything about it was looking perfectly fine, right? Just the day before, the momentum still looked good. You're above the 80 EMA. We hadn't made the extension that I was focused on, and that's why I still have it. This is what I was saying, how, all right, this is not exactly what I wanted to happen, but if you can take the good with the bad, ideally, the good compensates for the bad, and that may end up being one that I just have to get out of. At this point, it looks like it might want to test that 50-day moving average. It just feels like dead money, which is to say I could get in here and say, all right, because I just have the shares of it right now, so I could get in it and try to hold. But at this point, with this type of a break, it just feels like you'll probably stay inside this range into earnings. So I will probably be better served by just taking that cash and moving it into something else. But situations like that just represent a fair balance of what I'm bringing you. Not everything is ISRG. You will have some of these too, but keep your head right and keep moving. Coming back to look at Amazon, we already spoke about that one to a good degree. I also have Best Buy, that is something I would like to add to. We covered this in whenever I did the last nightly videos. I believe it would have been Monday. But we were looking at the idea of buying this on a pullback, and it just hasn't quite given it to us yet, but I do still like it. For Dropbox, I just have the short single put in this. It's down about 20 bucks. So this was my take on the trade of the week, and this is about how I feel about these types of chart patterns. As always, take all the advice that you can get and try to dissolve it down into what is most useful for you. So I can appreciate what Danielle was trying to do with this off the smaller time frame charts, but do you also see how it's going to be so much easier to be directionally long once you get above that 21? So that's the way that I took this. It was, not my favorite pattern, so I traded a little bit smaller. Overall, the idea is still okay. I had the intent of taking the shares on it if I had to. At the end of the day, with that high skew reading and everything else, I'm really leaning towards maybe taking a little bit of risk off, so I may not hold that all the way through the weekend. In DPZ, you've got a very nice daily squeeze. Now, these earnings are due up tomorrow, and if they can have a surprise, we talked about a butterfly in it. Outside of that, I don't know that there's anything else I would do with this. We'll have to see how it opens up. For eBay, I did the short straddle, and that looks to be okay in the extended session. On 5, I had some limit orders sitting out here to sell our call. They didn't quite get hit, but be on the lookout for those tomorrow. I think continuing to hold the vertical should be easy enough. The directional call is in a good spot to take some profits just so you can ease that risk up off the table, and I would like to exit that on any strength if I can get it tomorrow. And I believe that basically brings us full circle. There are a few others. Home Depot has done just fine. We talked about selling those $200 puts, and that's been a very solid, helpful trade. I like the idea of being long Etsy. That looks awesome, in all honesty. You know, right now I just have 5 short puts. Let me check that actually. Yeah, 5 short puts where I sold the 45s. So this is something where it's all going to be a little bit different depending on how you resonate with risk and what you like to do. But I think this is an interesting way of trading, of saying if I'm willing to hold Etsy shares anyway, let me sell a chunk of those puts right there at the money. And then really, if you want to be I would say really good or try to be professional about this, don't sit here and be stubborn about forcing them to expire worthless. Say, if I did get the shares, I can handle it, but really, if I can sell these for $1 and then buy them back around 20 or 30 cents, that's a good trade. And if you can allow yourself a little bit of leniency in the risk to do it, I like that plan. You can see I've done the same thing with Lulu, which had a decent recovery into the end of the day. We mentioned Home Depot has been a very solid, reliable trade, just like 5 has been. And then really, you know the story with the rest of these. The only 2 that I might look at with you still would be Wing and Spotify. So looking at these 2, Wing, there's not too much else to report on. I've covered this in pretty much every nightly video that I've been able to speak with you on. I will say that today is a good recovery. You know, it may have finally got it back together today. I don't know that I'm going to scale into this one back heavy again, just because if it chops, I don't want to be sitting there sweating all the cash I have allocated to it. But it was nice to see that recovery, and if you have just an infinite amount of patience, you can probably see that through. And then the other place that I'd have you look is Spotify. So with Spotify, kind of a rough representation of symmetry, but I think something that is still worth honoring. A nice rebound back up above the 80 EMA after it and held it today. And then you have this nice 78-minute squeeze. So right now I'm still pretty heavy into Spotify. You know, this is kind of where I try to balance conservative recommendations versus adapting into the style that I have learned from John over the years, which can be extremely successful in the right spots. So I peeled off 7 of these. I had started with 20. I may have had 25, but I definitely took some profits on that strength. And now what I'm looking at is the idea that if this gaps down tomorrow, it will be a buying opportunity. If it happens to be trading up into the new high, above let's call it 190, well then I'm only focused on taking profits. If it happens to be down here somewhere around 183, 184, that's where I think you get a chance to pick up those earnings series calls and see if we can catch, from there, catch the push into the new high. So that's what I've got for now. I think tomorrow will be very interesting. If you haven't looked at it, this Stock Traders Almanac, it is not, you don't want to bet the farm on this, but this is something I have found helpful, and based off of the past 21 years of data, there's a 60% chance or better that tomorrow is a bullish day, and then Friday is just the inverse. So they go through and measure they reference the past 21 years, and just try to be helpful in this way. Like I said, it does not always work, but if I can get it to come through for tomorrow into Friday, it's the idea of thinking strength here, sell a lot of what you've got on that strength, see if Friday can calm down a little bit, and then over the weekend we start becoming a little bit more in cash in honoring that skew reading, and then we get started with the August expiration. So I hope that's helpful. If you have any questions or comments, please let me know. Otherwise, you guys have a great night, and I'll see you first thing tomorrow in the chat.